Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, who's the founder and editor of Traders Corner. Garth, welcome back. Hope you had a good mini break.
Yes, I did. Very good. Nice sun on the beach in Mauritius, so it was good.
Well, you look relaxed. And were the markets good to you while you were away?
They were very good. In fact, it seems like when I'm away, it's when things start to work out. So maybe I should go away more often. Because we've certainly seen a nice turn of fortunes for the portfolio in the last week while I've been away, which we'll go through now on the show.
Okay, well let's actually look at that trade, and it's on the top 40, and I know you want to start off with those slides.
Yeah, well, I've got a chart of the top 40 index of our market up on the screen at the moment, and what you can see is that we saw this reasonable correction in the market through March and into April, and then we saw a small little inverted head and shoulders pattern there which unfolded throughout April, and when we broke up through the neckline of that inverted head and shoulders pattern, that sparked a move higher in the market. And what you typically do with these things is you take the height of that head structure and then you project it up to get your minimum upside target. And you can see that we met that target. It was at about just above 36,000 on the top 40 index. Now, we're sitting in a position now where we quite overbought. We haven't quite gone up to meet the previous tops in our market at this stage, and I don't really know where we go from here. But be that as it may, we have made some money off of our long trade on the top 40, which we put on recently. And I want to just have a look at the chart of the Aussie 40 future.
Okay.
This is the June 2013 top 40 future that we're looking at here. This is a 1 hour chart. So in other words, it makes a candlestick plotting every 1 hour.
Right.
And you can see this basically goes back to the 25th of March, this chart. And we did a long trade here recently based on that put spread option structure, which I've done, and we'll get to that in a minute as well. But I want to just take a look at this chart here and show you, first of all, there's that inverted head and shoulders pattern, which we looked at on the daily chart a minute ago. This is now on the hourly chart, and you can see that inverted head and shoulders pattern there quite clearly. What happened was we saw that steady downtrend through the first half of April. And remember, the key level on our top 40 put spread structure is 34,000, which is that level over there. Now, when the market broke out through that downtrend, it then moved up through the 34,000 level, and I then decided to buy one top 40 futures contract against our put spread option structure because we were hedged to the downside. So effectively I had no risk on the downside, and I had the ability to participate in the upside by buying one futures contract here. So I did that. I bought one contract at 34,005, and then you can see the market's moved up quite nicely since then. Again, if we look at that head and shoulders structure, we take the height of the head, which is that big red arrow there, and then you project that same distance up to get your target. And you can see that the top 40 future also met that target perfectly. Came in at 36,200.
And I imagine there must have been a slightly worrying moment when it sort of spiked up and dropped down again, and you must have thought, was this the right call?
Yeah.
And then it started moving back up again.
Yes, but remember that we have that put spread option structure on the downside, which gave us protection. And effectively, I'll show you now, but we effectively had what's like a V-shaped payoff with the structure by buying that one futures contract down there. And it's worked out very nicely for us. I have, however, taken profits on that one futures contract. I sold it at 36,157. That was after that inverted head and shoulders pattern was met. The target was met, and we saw the market starting to pull back a little bit from that target. So in the end, there I banked a profit after costs of 21,486 rand. Yeah, so that's our biggest profitable trade for the year to date, and it's certainly gone a long way to put us on the right side of the ledger in terms of this year's performance.
Yeah, and it seems as if you banked it at the right time.
Yeah,
well, looking at that chart.
Yeah, certainly as things stand now, it appears that it was quite a good time to bank it. I don't know whether we'll go up and take out that high again at 36,200 or not. Maybe we pull back. I'm not really sure where we go from here. It's a bit unpredictable right now.
I suppose it depends to some extent on a rally in the resources shares, because really that's what's keeping our market under pressure.
It is, and we'll talk about that in a minute, but that resource index continues to look worrisome to me. It still looks vulnerable to further weakness.
Yeah, okay.
If we just have a look quickly at the payoff structure of that top 40 put spread structure, and I know we've looked at this many times on the show, but I'll quickly show you. So this really shows you the payoff of that option structure that I did. where we above 34,000 on the top 40 index, we pay away a small premium. Below 34,000, we start to make money, etc. Now, with that long top 40 futures contract that I had bought, effectively it introduces that white line there. That's the payoff of a long position in the futures contract. So above 34,005 in this case, we make money on that futures contract. If it had gone down, then we would have been losing money on that futures contract. However, we'd be making money on our put spread structure.
So you'd be sort of square, really.
Well, you get this V-shaped payoff because I had 2 put options that I was long off here, and then only 1 futures contract that I was long against that. So in effect, from 34,000, I was long if the market went up, and I was short if the market went down. It was quite a nice position to be in.
Yeah.
Anyway, it's moved up, as we said. It's moved up to just north of that 36,000 area over there. And I used that as an opportunity to bank the profit at 36,157. So we're out of that trade. We still do have the options legs of this trade open. And who knows, between now and the June expiry, anything can happen. But nonetheless, we've made that 21,000 Rand profit on the Aussie 40 futures contract, which has worked out nicely for us.
Great to be able to bank that.
Yeah.
Okay, so I mentioned the resources sector, and this is plays into this week's trade, which is a short, which is quite unusual. You don't often enter into short trades, but obviously the chart of Anglo American is ugly enough.
Yeah, it is ugly enough. Yeah, I mean, regular viewers will remember that we looked at a chart of the resources index a few weeks back. And I said that at the time that we were breaking underneath that 45,000 area on the resources index, which potentially could be quite bearish. And what I'd look for in the weeks ahead is to see what sort of an oversold bounce we get from the resources shares. And if it was a weak, feeble, low volume, low conviction type of bounce, then I would view that as probably just a consolidation within the downtrend, and that there could be further downside pressure. Now, what's transpired since is exactly that. We've seen the resources shares bounce, but they've been rather feeble, not a lot of volume conviction, and certainly to me, it doesn't look as if there's a tremendous amount of interest from the buying side that's been coming into the resources sector. Now, Anglo American is one of our heavyweight resource shares. Obviously, BHP Billiton is the other one. This stock, Anglo American, makes up about 22% of the resources index. So it does hold a pretty heavy weighting in that index. My feeling was that if my view is that the resource index is looking vulnerable, let me find the weakest stock or stocks in that index to short. And Anglo American certainly fits the bill as being one of the weakest shares in that sector. Also, Anglo Platinum is one of the weakest, and obviously
And Implat.
Yeah, and Impala, but Anglo Platinum and Anglo American have a close relationship because of the cross shareholding. So the weakness that we've seen in Anglo Platinum's share price recently is to some extent reflected in Anglo American's as well. Anyway, if we look at Anglo American in isolation here, what I see, and this is a chart going back over the last four years odd, that lateral level at 240 Rand that I've put in there, that goes back to 2009. And you can see that we've actually broken down below that lateral support level. So this share effectively is trading at pretty much at 4-year lows, which is not a good sign. Also, what I see there on the right-hand side of that chart is that the stock seems to have consolidated underneath that 240 Rand level, which is now resistance. Was support previously, but because it's broken below that level now, it becomes resistance. And the stock seems to be battling to get up above that level. It appears to me as if it's just consolidated, and we might be in the process of working our way to make another leg to the downside. Now, I want to zoom in a bit on that more recent area of trade, and this really goes back over the last 6 or 7 months or so. So here we have the chart. What you can see there is that level that I spoke about, that lateral level. It's actually at about 237 Rand, give or take. But what you can see is that there it was support over there. We broke down underneath that support, and now the move up has failed at that level. So it's failed at resistance. What you've also got is a situation where your stochastic oscillator is looking very overbought at the moment, and you've got bearish reverse divergence happening here. Now what that is where the stochastic makes a higher high, yet the share price makes a lower high. So in other words, the share is more overbought on this little rally than what it was on the previous rally. That's quite a bearish setup when you see it happening in a downtrend. So I took the opportunity here to enter a short trade in Anglo American after it reversed down off that resistance level. And I've gone short at 231 Rand and 91 cents. and I'm putting a stop loss here at 242 Rand. So in other words, it would need to go back up and break above that resistance line in order to trigger the stop loss.
So it's a fairly comfortable stop loss. It's not that narrow.
Yeah, it's about 10 Rand away from where we entered the trade.
Yeah.
So it gives us a fair margin of comfort. And if it was to go back up there, then I'd obviously have to concede that my analysis is wrong.
Yeah, although I have seen on the Twitter sphere and various commentators suggesting that Anglo could be headed back to, what, 150 Rand?
Yeah, look, that's a long way down, but I mean, I don't know if I'll make a prediction as ballsy as that, but I think that 200 Rand could be on the charts here. I wouldn't be surprised to see that.
Okay, so Garth, so you've actually entered the trade, then talk us through the details of that.
All right, so I went short at 231 Rand and 91 cents. Our stop loss is 242 Rand. That means that the risk per share in this case is 10 Rand and 9 cents. I'm risking 1.5% of our trading capital, and at the time we had 263,000 Rand of trading capital, so 1.5% of that is 3,945 Rand. So I take it through the calculation that we always do. We divide the portfolio risk, divide it by the risk per share, and that leaves us with a figure of 390 shares or 390 CFDs, which is what I've done for the portfolio. And yeah, and the target, I've set a target here of 200 Rand. And our risk to reward ratio in this case therefore is 1 to 3.
Okay, so it's a higher probability trade. But in that case, why are you only risking 1.5% of your capital, which is a little less than what you might normally put on?
It is. Normally we'd risk a maximum of 2% of our capital on a trade. I guess it was more on gut feel and also just on the outside chance that you get a short squeeze here. I don't want to be risking an excessive amount of our capital in the outside event that perhaps happens.
Garth, is your general feeling for the resources sector, is it sort of quite ugly because it has, turned, especially for the platinum shares in the last couple of days, it's just, one just gets a sense that foreigners are looking at this and saying, I don't want to be near it at all, and they're just dumping their stock. I mean, if you look at Implats today, it went to sort of 96 Rand at one point, and that's the lowest it was after the financial crash. And its high actually of this year was about 170 odd Rand. So, and it's, similar situation with Amplats, and I guess Anglo is also, as a result, looking terrible.
Yeah, look, I mean, for me, being mostly technically focused, but also keeping an eye on the fundamentals, the resource sector still to me does look worrisome. We've highlighted that big support level, that 4-year support level on the resource index, which has been broken and the market's been kind of consolidating under that level. My gut sense is that there's still potentially some panic selling to come in this sector, and it doesn't look good at the moment. I'm sure at some point the resource shares will just get too cheap, but fundamentally there's challenges. Technically it's not looking fantastic at the moment, and I'm more inclined to be on the short side in this sector of the market right now.
Yeah. All right, so Garth, what does the portfolio look like then?
It's looking much better than what it has. We've actually turned a profit now, can you believe it, for the year to date. It's taken us 5 months, but we've finally got there. So that greyed out area over there is all our top 40 put spread structure and the long futures that we've done against that. There you can see the 21,000 Rand profit that we realized on that top 40 future. Remember 2 weeks ago we also entered
I've forgotten about that.
Yeah, we went in long on the new Plat ETF, and that's working for us. We're up 2,000 Rand on that. And then we've got this short position in Anglo American, which is working nicely for us. We're up 6,000 Rand on that. So all in all, our portfolio is sitting north of 271,000 Rand. It's up 8.5% for the year to date, which is much better than it's been at any stage in the year, in the months leading up to this show.
Well, patience, I suppose, is a bit of a virtue, so thank goodness it's paid off. And Garth, we spoke about CFDs the last time you were here, and you've got a course on CFDs up next. Yes,
thanks to those people that did email me and express the interest in attending a 2-hour CFD course. I've set a date, the 6th of June in Johannesburg. So anybody that's interested in that course can email me, garth@traderscorner.co.za, and then I'll send you the details and the price, etc. And it's all about learning to understand CFDs as a product.
Okay, great, Garth. We'll leave it there. Thanks as always for joining us.
Thanks.
That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.